This is your Rebel Dividends briefing, and today we are going to connect two stories that almost nobody is putting together. The same country that had a hand in crushing Bitcoin is now being forced, against its will, to do the one thing that lifts it. That thing is printing money. You were probably told Japan helped trigger the last crash. That part is true. What almost nobody is telling you is the rest of the story, the part where the exact same force that just hammered Bitcoin is about to flip and become one of the biggest tailwinds pushing it back up. Stay with me, because by the end, this will change how you read every headline coming out of Tokyo. Start with the crash you just lived through. Look at this chart of Bitcoin. It ran to a record high near $125,000 last October. And then it fell hard, dropping about 32% within just a few weeks. At the lows, it was down close to half of its peak value, and it still sits far below that old high, trading down near the mid-60,000s. If you owned it, you felt every day of that. Now here's the question that matters. What actually caused that kind of violent global selling? Part of the answer traces straight back to Japan, to its interest rate decisions, and to something called the yen carry trade. Hold that thought, because understanding it is the whole key to what comes next. In the very same weeks you were losing money, Japan was quietly losing control of not one, but two markets at the same time. Look at these two lines. On one side, the yen, its currency, fell past 160 per dollar, its weakest level since the 1980s. On the other side, its government bond prices were breaking down, with long-term yields pushing to record highs, the 30-year approaching 4%, a currency crash and a bond crash, happening together. That combination is rare, and it is dangerous because it is exactly how a wealthy, developed country starts to lose control of its own finances. When both your money and your debt are being sold at once, you are cornered. Here is why Japan is so trapped. Look at this bar. Japan's government debt is more than 235% of its entire economy, and some measures put it as high as 255%. Either way, it is the highest of any major rich country, more than twice the average of the G7, far above the United States, Italy, or Germany. And it gets stranger. Its own central bank, the Bank of Japan, now owns roughly half of all those government bonds. So Japan is stuck in an impossible bind. If it defends the yen by keeping interest rates high, its bond market breaks under the weight of that debt. If it defends the bonds by cutting rates and printing, the yen breaks. It cannot save both at the same time. And right now, both are breaking at once. For decades, whenever Japan hit trouble, it did one thing. It printed money. This time, it tried the opposite. To defend the collapsing yen, it did something it had not done in a generation. It raised interest rates, and look at this chart. It did it with the fastest series of hikes in about 30 years. That was the bet. Hike rates, make the yen more attractive, stop the bleeding. And the verdict is now in. It is not working. The government deficit is still out of control. And despite those hikes, the yen and the bonds are still getting hammered. When raising rates fails to save your currency, you have almost run out of moves. And the failing rate hikes are now doing real damage on the ground. A weak yen makes everything Japan imports more expensive, from energy to raw materials to food. Look at this chart. The number of Japanese companies going bankrupt specifically because of the weak yen is climbing year after year. This is not an abstract market story anymore. It is real businesses failing. So the pressure to stop the pain keeps building, and every path except one is now closed off. The hikes are hurting, and they are not even fixing the problem they were meant to fix. So what is the one lever Japan has left? Turn the money printer back on. Go back to buying its own bonds and print the yen to do it. Look at this chart of the Bank of Japan's balance sheet. It is a picture of decades of money printing, ballooning larger and larger over time. This is the tool Japan has reached for every single time it has been in trouble, and there is simply nothing else left in the toolbox. When a country is this deep in debt and its rate hikes are failing, printing is not a choice anymore. It is the only exit. That decision is what turns this whole story around for Bitcoin. Now let me show you Japan's fingerprint on the crashes, because this is the mechanism. The cleanest example is August of 2024. For years, big investors borrowed yen almost for free and used it to buy assets all over the world. That is the carry trade. But when Japan hiked rates, borrowing yen suddenly got more expensive. And all those traders were forced to unwind, to sell their assets and buy back yen in a hurry. Look at what happened. The yen spiked about 12%, and Bitcoin, the most sensitive risk asset of all, fell about 21%, first and hardest, faster than stocks. We saw the same fingerprints in the spring 2025 tariff shock, when the Nasdaq fell about 24%, the S&P about 19%, and the yen strengthened about 7%. The telltale sign that borrowed yen bets were blowing up again. But here's the turn. That very same tightening is what broke Japan's own bond market. It cannot keep hiking, so it will be forced to reverse and print. Here is the flip, and this is the whole point of the briefing. When Japan is forced to let the yen get cheap and turn the printer back on, that same carry trade that just caused so much pain reverses and lights up on steroids. Think about it. When the yen is weak and Japan is printing, the entire world can borrow yen for almost nothing again and use it to buy harder, scarcer assets. An ocean of nearly free money goes looking for a home, and the scarcest, most global home of all is Bitcoin. We have watched this movie before. Japan's 2013 money printing bazooka and the worldwide printing of 2020 both flooded the system with cheap liquidity, and both helped power Bitcoin's biggest bull runs in history. The difference this time is that Japan is not choosing to print. It is being forced into it. Now the honest catch, because we always give you both sides. In the very short term, a sudden shock or a fast rate move can still knock Bitcoin down first, exactly like it did in 2024. This is a structural, multi-year setup, not a promise about next week. But the direction of the pressure is clear. So here's the bottom line. You were told Japan was killing Bitcoin. And for a moment, during those forced unwinds, that was true. But the machine has flipped. The same country, the same currency, the same carry trade that dumped Bitcoin is now being cornered into printing, and that turns it from a headwind into a tailwind. When governments are forced to print to pay debts they can never repay, every unit of their money buys a little less, and people flee to what cannot be printed. Bitcoin is the purest version of that. If you want to read the full written report with every chart and source, the link is right below this video. And if you want to talk through what this means for your own position, call Dean directly at 505-322-7515. This has been your Rebel Dividends Briefing.